Ira Epstein of Linn and Associates with your metals market wrap-up for this Wednesday, the 8th of May, 2019. We're about 4:10 p.m. Central Daylight Time. Now, before I go into what I'm seeing in the markets, I want to give you a heads up. On Thursday, May 9th, I will not be in the office in the afternoon to do these videos. So there will not be a video then. There will be the normal weekend wrap-up. I've planned this afternoon off, so that's how it's going to be. I didn't realize that how important tomorrow afternoon is going to be because obviously tomorrow's the day the Chinese delegation really starts talking with the president, and is it going to be a tit-for-tat come midnight Eastern time on Friday if the tariffs go into place. There's no way to know what's going to happen there. We've just seen in the metals, I don't think it's going to impact it, Attorney General Barr, the House Judiciary Committee, voted to hold him in contempt, which doesn't mean he's in contempt of anything. It has to go on to the full House and when they decide to take that up. But how do you play these markets in front of what might or might not happen? Do we get a trade deal? Does this whole thing blow up? I see because the president's put the heels of the Chinese to the fire right now, there's either a deal and they wrap this thing up or that's it. I don't see them saying, oh, okay, you're backtracking, we'll give you more time. Why would you do that as a negotiator? So I think this is a big event, a big time, and how you play it, that's going to be up to you. When we take a look at gold for the week, and this is a weekly chart, it's up a penny, nothing, a dime. That's what it's up. So it's just gone so far the first 3 days of the week, nowhere. When you take a look at the chart, it tried today to break out to the upside, got over all the recent highs, thrown right back down. There's just so much uncertainty in these markets. Should you have a long position basis these trade war possibilities or not? Will the bid come out of the market if the trade war goes on or comes off? Everybody's got a different opinion, and you see the uncertainty in the market. Now, when I just look at a chart action, you have the pattern of higher lows, higher highs. Take out 1279.10, and from where you're finished, 1281.40, it's just under $2 from here, and the market loses that uptrend right away. It goes into a higher high, lower low pattern. Where are the key moving averages? Well, you tell me where you're fighting this battle. Right there at the 18-day average of closes. So what the market's got is higher lows, higher highs, but you settled under the 18-day average, which keeps the bias to the downside. This is a market that hasn't been able to put together any form of a downside holding or an upside holding. It's very frustrating for traders. In terms of the Bollinger Bands, what they're doing is they're narrowing in. You see how these black bands are coming into the market? That's because as you're going like this, the volatility to a degree is coming out. And those bands, as part of the nature of how the formula works, it comes in a bit. So we have resistance, 1293.60. The market settled literally against the 18-day average, what I call that line in the sand. And if it breaks through 1279.10, you put into play the possibility of getting to the lower Bollinger Band of 1269.80. When we come to slow stochastics, the momentum waned. You've gone flat, and you see that in price today too. When we come to GLD, the popular ETF, the market went up, missed today. If you look at the high, it's right over here on me, 121.54, mistaken out the 121.55. This chart is still cleaner than the futures, but here's what's wrong with it. You've got lower highs, lower lows, but you've been closing over the 18-day average. So you're not able to add to anything, and you're not getting high enough to take out a previous high in the market. Again, a difficult time. I will not be surprised to see this market hang at that 18-day average of closes. We had talked yesterday, was this market, the GDX, because you were losing the embedded reading, possibly, when you reopen today, going to make a run at wherever the 18-day average is. It did. It missed it by 3 cents. I'll call 3 cents close enough where it made its run, and now the question is, because it regained, if you take a look here, some downside, does it regain tomorrow when it reopens the embedded reading or not? 20.48, and because you closed at the low of the day near, or in the lower part of it, can be regained right on the opening in the embedding. A very, very hard position. You had that bounce. The question is, does the market regain its bearishness? The gold-silver ratio, still favoring gold over silver. You're staying over the 18-day moving average of closes, and you're not breaking through prior lows just yet. When you look at silver, you got up to $14.99 today, did not take out the previous highs, right into that line in the sand, that 18-day average, keeping the downtrend because of the legacy of lower highs, lower lows in place. But you have to pay attention that you now have higher lows. I wouldn't know what to do with that. Copper market, where did you go past 3 days? To the 100-day average, and today we're right back down into the toilet in the market, and you're oversold. Are you trending? No. You've got a higher high, lower and low pattern. You're doing more running of the Bollinger Band than you are anything else. In the platinum market, it confirmed today a downtrend. Again, lower highs, you've had lower lows, you're under the 18-day average, and momentum is pointing down. This puts into play the possibility of the lower Bollinger Band, and if that gave ground materially, maybe getting back to the 100-day average. On the other side, the flip side, if you take out 887.5 and don't take out that low first, you could end up then with the support in this area of the Bollinger Band with a higher high, turn the whole trend back up. So I think the area that the bears have to defend will be wherever the market reopens tonight. This 18-day average will fall, and if it rallies, that's their defense point. In the palladium market, I think if you're bearish, you're a little disappointed that it didn't follow through more and get to that Bollinger Band already. But the resistance area is pretty clear. It's the combination of the 100-day average and the 18 to negate everything and not turn the trend necessarily up. The question is negating. You'd have to take out 1373.30, and the market is oversold at this point. In the dollar index, classic, what? Running against this 18-day average. You've got lower highs, higher lows. Now, you get bearish this market if you take out 97.13.5. In order to turn the market friendly, you can't afford to take that out, and you got to take out this high of 97.86.5. But if you do that, you're about 15 points away from the upper Bollinger Band resistance. It's doing exactly what it should. This is a confusing market at this time. And with that confusion, I try to offer sanity to traders. Now, let me tell you what I do. In the morning, you know I record this subscriber video, and we're forever trying to improve what we're doing with it. So now what we've done is not only am I doing the 45 charts, but you know on the bottom there's a recorder that you can drag and get where you want. But how do you know where you're at other than you're just pulling and seeing? Starting, hopefully, tomorrow morning, you'll be able to drag on that recorder. It'll say grains. It'll say meat markets, metal markets, tell you right where you're at to make everything easier. And these are the different markets that we cover. And for whatever reason, I forgot to put metals right in here. We'll make that change over the next few days. But there's one other category, and I do cover the metals. It just came up yesterday. I can't believe that we missed that, and it's been this way for a bit, but we did. So how do you get this? Well, number one, it's a subscriber video, and the reason it's subscriber is unlike these public videos that you're watching right now, I can say buy here, sell there, put a stop here, here's what I want you to do. Second thing is I will discuss in the morning. I start recording at 6 a.m. Central Daylight Time. So I already know what's going on in Europe, where the other markets are. It's like I never sleep, but that's how life is when you're in this business. I will tell you what I think the active traders are, and of course the current chart picture. So I'm able to throw all this out. I'm not in that video. It's just what you see behind me with more studies than you see in these videos. How do you get it? Well, it's simple. You can go to our website. The cost for the first 30 days to try it out is 26.5 cents a day. You heard me. 26.5 cents a day, $7.95. No contract. If you want to continue on, it becomes $15 every 30 days. And after that, if you want to go 1 year, you don't have to even go to the next month, $156. Your choice, and you can always start out at the $156. It's all explained on our website under Research and Education. That's the spot to go, www.iraepstein.com. You can always call my staff. They'll help you as well. And you can click up here. It'll take you right to our homepage. You have yourself a good day. I'm Ira Epstein.